Hello and welcome to this Monday edition of the Daily Market Recap from FXTimes. I'm your CMS Forex market analyst Nick Nassad, and today is January 11th, 2010. We begin today's broadcast with a look at the euro-dollar pair, which showed the dollar sliding in overnight trading against the euro, which happened against most other currency pairs as well. The euro managed to extend its gains following Friday's non-farm payroll report and broke above the 1.4450 level to start this week's trading, and even rose above 1.45 once we reached the European session. We had some positive economic data come out of China, which helped to boost risk appetite, while the greenback was pressured by its weak labor market report from Friday. What this means is that the U.S. jobs report, which did come in weaker than expected, is being perceived as more a dollar issue and not necessarily negative for the overall global recovery story. Zooming the pair out to show a longer term time frame with 4-hour candles, we see that today's move puts us above this consolidation zone we had in late December and early January, and it's the first time we've moved above the 1.45 level since December 16th. The greenback gained very strongly during most of December after we had a better than expected non-farm payroll November release. That had raised expectations that perhaps the Fed would begin to tighten its monetary policy earlier than it had been signaling to the markets. So we had greenback strength as a result, but now after hitting some pretty strong support around this level here, the 142.50 level, we're seeing the greenback giving up some of those gains, and with the weaker than expected non-farm payroll report, some of those expectations around the Fed may be calming down somewhat, and we may see a bigger correction to this December move in favor of the greenback. So the main fundamental data coming out for the US is in the latter half of the week. So we'll see if we have a further move, perhaps to test this 1.47 area, or if the euro is going to consolidate some of its gains prior to those releases in the later half of the week. Here we're taking a look at the euro-Swiss franc pair, and we see that we had a pretty sharp gain in favor of the euro in overnight trading, as we had some comments come out of the Swiss National Bank president, in which he said that the central bank will continue to prevent any excessive appreciation of the Swiss franc against the euro. That warning came as we almost hit the 1.47 level overnight, and if we zoom this pair out, we see that the Swiss franc has been gaining strongly against the euro ever since it broke the 1.51 level, and which had followed the Swiss National Bank announcement on December 11th. So most of the franc's advance during this past month has been based on speculation that S&B authorities are taking a more passive policy regarding the currency's appreciation, but after today's comments, we may see a correction to this move. If not that, we may see some sideways trading until traders have a better feeling for when the S&B feels what is an excessive appreciation of the Swiss franc against the euro. So likely we're going to see the 1.47 level setting up as an important support level for this pair. Getting back to our dollar crosses, here we're looking at the pound dollar with 1-hour candlesticks, and we see that overnight the pound, just like many others of the dollar's rivals, gained against the greenback, hitting a intraday high just below the 1.62 area. However, since then the pair has given up most of its gains, though for the day it is still trading higher. We were unable to reach the highs we had here in today's session, and our resistance level can go back to the bottom part of this consolidation we had in mid-December. So this level here is the 1.6170, and though we did move a little bit above that, that seemed to be the point where traders stopped buying this pair. The pound has been on the defensive throughout most of the fourth quarter, as it is the last major economy to escape its recession, and it did not do so in the third quarter. And it seems that the Bank of England is keeping its loose monetary policy in place, and that has been hurting the pound's value in the currency markets. Moving along, here we're taking a look at the Australian dollar US dollar pair, which jumped above the 0.9250 level in order to start the week. It reached a intraday high around the 0.9320 level, and since then it has been trading rather sideways. Today's intraday high matches up very nicely with the high we had seen in the beginning of December. In fact, we had both of these tops here acting as a very important resistance level for us, and we see that the markets were unable to move past that in today's trading. The next important level then is this high we had, which was a high for the year, around the 0.94 area, which we hit around November 16th. So in today's session, the Aussie was boosted by a better than expected release from China and its trade balance. So let's take a look at that fundamental release. In that trade release from China, we saw that for the first time in 13 months, exports measured in annual terms were positive. They grew 17.7%, which means that China's trading partners are recovering enough to demand more exports from the country. Also, imports jumped by 55.9% on the year, which is a very positive sign for an economy like Australia, which supplies a lot of China's natural resources such as iron ore and coal. So that was part of the reason the Aussie was stronger in today's trading. This report is also just generally more upbeat for the global recovery story compared to Friday's weak jobs report from the US. So it helped to boost risk appetite overall. One pair that we might expect, or one currency that we might expect to gain off the news was the Canadian dollar, and it did so initially as the US dollar Canadian dollar pair fell to the 1.0250 level in overnight trading. However, that was a very good support, and we actually saw the Canadian dollar lose in New York trading as it rose all the way back to the 1.3220 area. So what we're seeing here is perhaps the 1.03 level is pretty important as support, as the general gains by the greenback we have seen by the Canadian dollar we have seen throughout the latter half of December and early January are sort of stalling around that area. Still, we did go below that level, so we'll see if that is more a clear out action or if we continue to see lower lows as we progress throughout January. Today we did have the Canadian Finance Minister say that Canada's recovery remains fragile and tentative, and that a firm recovery must still be established. So that weighed on the Canadian dollar. We should also be aware of the fact that the Bank of Canada did in some of its previous statements in 2009 say that the currency's appreciation was hurting the country's exports and therefore its recovery. So we'll see if the Bank of Canada brings back that kind of language in some of its future statements or in its comments from bank officials. Generally though, we are seeing this downward trend, and we'll see how the pair reacts following our low today, which goes back to about October 15th here. So we have another low at the 1.02 level that could act as important support. We also had some housing data come out from Canada, and as we could see for the month of November, building permits were down 4.6%, which was a bigger than expected drop. And from the charts to the right, it does stall the sort of uptrend we've been seeing in the value of permits. Housing starts, meanwhile, for the month of December rose to an annual pace of 175,000, which was better than expected. So a bit of a mixed two reports on Canadian housing sector. Now let's take a look at what we can expect for fundamental releases in the upcoming session. Tonight, Japan posts data on bank lending, money supply, and its current account, while the UK releases its BRC retail sales monitor and the RICS house price balance, while Australia posts its home loans. Overnight, the UK will also release its trade balance and the DCLG house price index. Tomorrow we get trade data from both the US and Canada also releases a measure of housing prices. So that will wrap up this edition of our daily market recap. For more news, videos, and analysis, please do visit our site, FXTimes.com. I want to thank you for watching and wish you good trading.